100 basis points is what I think the Federal Reserve not only needs to do, but will be doing tomorrow. You know, the U.S. dollar has fallen significantly, against nearly everything in sight. This 100 basis point rate cut is pretty much priced in. However, what I would say is that the Federal Reserve will need to tell the markets, rate cuts are something that they aren't stopping after tomorrow's rate decision. The futures curve is still pricing in, I would say, up to 50 to 75 basis points of further easing, more like 50. And that would really drive the dollar, down in the dumps against the euro. I expect
down in
the
the
euro
dumps
dollar
against the euro. So what sort of levels are we looking at, Kathy?
Good question. I expect the euro to hit 160 and beyond before the ECB really gets concerned. Basically, I think I mentioned this last time I was on. The euro dollar rose 13% in the course of 2 months before the ECB said that the move was brutal in 2004. So even though we've had quite a significant move lately, it's only really 10%. If we sort of add that up to 13%, that would put us at 1.62 in the euro dollar.
Now, what about for dollar yen?
Sure.
I mean, we also have some domestic issues. At the Bank of Japan, we're about 24 hours away from that leadership vacuum. Is that having any impact on the yen?
It's not really having that much impact on the yen because, as you can see, the yen is very strong across the board. What really matters in Japan is risk or no risk. Is it a matter of the market stabilizing? Will the Federal Reserve give us what we want? Will Lehman Brothers or another bank skirt bankruptcy? That's really what matters for the yen, not necessarily the leadership vacuum.
Okay, we got 30 seconds here, Kathy. What now for the high yielders? Risk aversion is certainly up again, and commodities are headed for record declines for a change. I mean, what can support the Aussie and Kiwi dollars now?
I would be really careful at this point because we take a look at a lot of things, including risk reversals and what we call the CVIX index, which is currency volatility. And all that is telling us the New Zealand dollar, Australian dollar, carry trades in general are probably not going to do very well. And I would be very careful going long carry. If anything, I'd stay short dollar yen. And that's really the story.
Okay, we got you. Thanks for that, Kathy. Kathy Lien of Daily.